I wonder about the law of large numbers. How do you ensure Oracle doesn't become IBM? That IBM for years and years and years I can't grow revenue and has become boring to some investors. Tell me where the excitement is so that investors get back in an exciting way into the stock.
So I sense your comparison with IBM. IBM's bad in your comparison. Okay. so just want to make sure I got clarity on that. I think for us, whether we have a technical strategy. So, it's very important in a technology company that you have a technology strategy. So when you listen to companies say, here's our strategy, produce a lot of cash flow, buy back stock, increase our dividend, that's not a technology strategy. Our strategy is to lead the applications market as it moves to the cloud, lead the movement of database technology as it moves to the cloud. I think our strategy is irrefutable. That said, almost everything in our company is at some phase of transition, moving from the old model to the new model. The company is going to grow its revenue. The application example we talked about a few minutes ago is just one example of that.
But we have not seen a company of your size keep up the growth numbers that you've seen over the years. So is this a part of your strategy? How do you make sure that you do keep exciting growth in place? What are the product cycles that are most important to keep that going? Because let's face it, there is a law of large numbers.
Right. I think our issue, Maria, has been more about not really, when you have a founder like Larry Ellison, he's very focused on generational changes. Doesn't mean he doesn't care about a quarter, doesn't care about a year, but at the end of the day, what's in our DNA deeply is to build for the future. And so we've, in some cases, given away revenue that we otherwise could have had in the interest of moving our business to where we think the market is headed. So if we were solely interested in growing, that was our sole objective, to grow revenue on a quarterly basis, we wouldn't have de-emphasized many of the businesses that we've emphasized to go pursue where we think the market is headed years from now. And that we wouldn't have made the applications trend. Our applications business is now in aggregate growing double digits. We could have stayed on the old model and probably had some short-term growth better than we had when we went through the transition. It wouldn't be where we want to be 5 years from now. And so we've pretty much played the long game at every chance to move to where we think the market is headed. And it will result in long-term revenue growth as our legacy businesses, as a percent of our revenue goes down. We have no business in Oracle growing at the growth rate of Oracle. We have businesses either growing 40% or declining 30%. And when you mix them up, you get to the result of Oracle. As those businesses become a smaller part of our total, and the growth businesses become a bigger part of the total, revenue will grow. And one thing you can say, I think you can say when you look at the numbers, is when we get revenue growth, we know how to turn it into cash flow and earnings.
Yeah, you sure do. But I mean, the skeptics are out saying some of the growth is from buying back stock, right? I mean, the buyback last quarter, 5% of the company, all else equal, lifts earnings by 5%.
Well, listen, if there weren't skeptics, this wouldn't be fun.
What are the levers you need to push to accelerate growth at this point?
I think more of the same for us. I mean, you hit on a few of the things in applications, moving our user base. Most of our competitor applications are old generation applications. We get a chance to take a significant amount of market share. So executing the application strategy, moving our customers, and then taking other people's customers into the more modern world of SaaS, extreme growth for us. The ability to move our database to Gen 2 Oracle Cloud Infrastructure and Autonomous Database is actually more growth opportunity than the applications business is. So just executing those two things, huge for us.
The cloud services and license support revenue, there's some worry about decelerating for 5 straight quarters. Within the category, you indicated that software support revenue is the growth story here. But does that indicate that we'll continue to see deceleration in the other areas?
Listen, I think deceleration still goes on in places that we have legacy businesses that we're no longer really focused on. I mean, some of the areas like, for example, our consulting business, services business, there's a line on our P&L called services. Services for our historic on-premise products look like this. Our services for our cloud products look like this. It reports as like 1% growth or flat. The reality is one part is growing 70%, the other is declining 60%. Right. And so it mixes to that result, and you see that in virtually everything we do. Our SaaS business is growing substantively. Our on-premise license to our user base is sort of flattish in performance. And so it's really all about us moving to that next generation strategy that I've described. Again, autonomous database, applications, and executing the application strategy. That will result in significant growth for us.
Thank you so much for joining us.
Thanks, Maria. Appreciate you being here.
Great to see you.
Thank you.